Good morning, everyone. It's Monday, March 13th, and wow, this weekend it was jam-packed with news. I'm not going to dive too much into it, but I do want to shout out the fact that these Reddit talks are ending. So if you've been listening in frequently or from time to time, the next place to get them would be the Discord. We're all moving to the Discord. We'll move today as well at 9:30. So click the link in the top comment, and we'll move everyone over. When the bell rings. That being said, I'm going to invite a couple people up and let's get going because lots to talk about. So, welcome, Scald and others. What you guys got? What are your thoughts on events of this weekend?
Well, considering First Republic Bank FRC is down 60%, WAL is down 30%, and PACW is down 30% as well, looks like we have a dominoing bank collapse on the West Coast through their regional banks. I'm going to say that that's bad. I'm just say that.
And then Biden's going to speak at 9. They misquoted at first. It was supposed to be 8, but he's going to speak at 9 about the economy and all the effects. So this feels like it's a historic moment right now.
The economy's better than ever. Don't worry about one bank. I just hope this translates into Carvana going down.
I think this could help with any of your bearish thesis on any of these non-money making dreams out there, right?
Yes, buy the dip if you have money left to buy the dip.
Yeah, I mean, it might be a little early to call it a black swan, but it's a crisis. I'm just telling you, it's got a similar feel.
Yeah, no, I agree.
There's some major differences, though. There are some major. First is the size of the bank. Secondly, is the reason why it's happening is very different. And third is the support that's already being extended to the banking system is pretty aggressive.
Good morning, Hardy. See you joining. How are you?
Morning.
Today?
I thought we were doing the talk today on Discord, but I suppose circumstances notwithstanding.
I think it goes over at 9. It switches over at 9:30. Hardy is what they're doing.
Oh, okay.
So now you know. Well, anyhow, I'll step aside.
Wish I would have got the facts.
So what's it called? Signature Bank failed, Silicon Valley Bank failed, and the Fed is bailing out the deposits, which is a problem because it basically means banks are now being given carte blanche to take on as much risk as they possibly can with deposits, knowing that they are 100% insured.
And the way that I read that, Hardy, and tell me if I'm wrong, is they understand that they have raised interest rates so much and there was bad management on these banks' parts on their treasury side, as we talked about last week. They feel a little bit bad and say, here you go. For the customers, not the assets, but for the customers, they're coming in because they feel responsible. Would you agree with that?
I don't know about feeling responsible, but they're certainly trying to privatize profits and socialize losses.
Yeah, and that's where it took longer in the 08 crisis, but I think that's where the similarities, they've come up a lot quicker than last time when they fought it for months. We won't bail anyone out, but...
Yeah, so I know a lot of people are staying on the sidelines, but I'm definitely going in swimming. I might get drowned, but that's okay. Why not? It's the only day I can go in there and be so speculative that I might be wrong and I might be right. I'm looking at COF 90 puts going for about 50 cents. On Friday, we'll see where it gaps up to see if I can get in there cheaper. BAC, I'm looking at $27 puts, and WFC, Wells Fargo, looking at $40 puts. These are all speculative. Please wait for market open to see if it gaps up, gaps down. As Hardy says, like this is, we're going to be swimming with the sharks, and yeah, we don't really know what's going to happen, and maybe it is smart to wait till the end of the day, or maybe let's say noon, to kind of get a feel what the option chains are really going to present to us. But that's what I'm looking at right now. Looking at also Baidu, looking for that to gap down a little bit, and then I'm gonna go on the put side for that, and that's about it.
Keep in mind that tomorrow morning we have the CPI print. So depending on if you're bullish or bearish on the number, current expectation is 6% year over year and 0.4% month over month. If you think the real number is different from that, you can buy 0 DTEs for Tuesday.
So my question is, with the fact that we have the banks apparently not doing so well, do you think the current bear sentiment over SVB failing might overpower any positive news on CPI?
No, the CPI numbers have been recorded already, so this is just a reporting to see if it's higher or lower. It reflects the data in February.
Well, I mean, I understand that, but we're just going to be getting that news for tomorrow. And I'm just saying, do you feel like that report coming out might be overshadowed by the fact that we have banks failing?
No, the number is what it is. So it'll either help the bank failing news or hurt it. Or maybe I'm misunderstanding your comment.
Yeah, I think that's what he's asking. So, like, let's say the number comes in hotter than expected. Is this other news about the banks failing and the Fed stepping in, is that going to will it change the sentiment with the number? Correct. The number is,
So if CPI is higher than expected, it implies that inflation is uncontrolled and therefore rates need to go up. If CPI is lower than expected, it gives Fed room to pivot and maybe keep rates where they are. So if rates go up, it's bearish on the market because the return needed in order to beat the risk-free rate is higher. And if the CPI is down, and therefore inflation or the Fed funds rate stays flat, you can expect bullish move on SPY.
And then this is slightly less related, but if a bank fails, what happens to the loans that they have?
They're usually bought up by some other entity. Keep in mind, in a bank failing basically means the assets are sold off to raise cash. So you'd still, if you owed money to Silicon Valley Bank, you're probably still going to owe that money, but now to whoever buys the loan.
In 08, several
Basically.
banks did very well getting to take over those loans from other banks. So do keep that in mind.
What will likely happen is those cash flows get butchered up into a series of tranches and then resold as a new issuance.
Yeah, they don't like to put all of those with one new bank. They'll try to split it up into thirds or fifths, right?
It's more like no one bank can take on the entire portfolio without a substantial discount. So by buying the portfolio and then reselling the chunks, you're able to get, in theory, a better price for the assets as a whole. Let's see.
So
Considering how XLF has pretty much gone through the floor, we could probably start looking to sell cash secured puts around $30 strike. We'll see how the price action is during the day. IV should still be high, and I'm sure as more assurances are thrust into the market, that implied volatility will come right back down. Sorry, you were saying? I think it was T Prince.
Oh, I am playing. I have Credit Suisse, June puts. I got in at 7 cents. I have Silvergate puts for April 21. I got in at 19 cents. And my degenerate play, which is looking pretty spicy, is SPY puts for 360, expiring Friday for 15 cents.
That is spicy.
Very spicy.
Muy caliente.
That's my degenerate play.
I mean, it might get some traction this week.
I know. It couldn't have come at a better time.
Yeah, I would hold that to Friday, probably. Or whenever you get a triple rate.
There you go.
I know they said be cautious, but is anyone out there already holding plays going into the weekend? Maybe not stepping into anything this morning, but something they have. I know we already had the bag holders anonymous yesterday, but any worry?
Those are what I'm already in. Those are from Friday.
I thought about rolling out of my GameStop position and moving that into Nintendo.
Where is that Nintendo guy that used to be here all the time?
Yeah, Woat or whatever. I think there's more than one, but yeah, there was a guy who loved it. He hasn't been around for a while.
Luce was the first one to really shout out that play. So he actually came out with the DD and everything on it. So
I think he's still mopping. Let's see. Implied volatility on XLF for the March expiration is the highest it's been in over a year. That should give you some context.
Now, with most of these regional banks in the KRE, do you still think there's more room to the downside, or what are you seeing in the Greeks on that?
The problem is I don't know what the new Greeks are because the market hasn't opened.
That's fair. There's been a lot of news. True. I'm
waiting for Monday to close, from which I'll use those Greeks to see how I reposition myself. But at least for now, when market opens, I intend to either buy hedges against my current positions or start closing out the profitable ones. Someone asked in the comments how it affects the credit markets. Hard to say. The implication is that it will actually make the credit markets more robust because the deposits are being guaranteed. So if you're lending money against deposits, at least the principal will go back to the investor, whoever they are. So hypothetically, if you were to deposit $1 million into the Bank of Hardy, I could take that million and lend it out to Scam Bankman-Fried at a 5% interest rate. And if SBF does not return the money, the Fed will still bail out that $1 million deposit. However, if SBF does pay me with interest, then I get to keep whatever cut of the interest and return you your deposit interest rate, whatever that would be. Or I'd keep the spread, basically, the difference between the interest rate given to SBF and the deposit interest rate that I'd be paying out. Does that all make sense?
Yes, it does. Except for the SBF guy. I don't know if that'd be my first person to pick to loan money to right now. But I got the comedy.
And that's correct, Stipper. The insurance rate, well, FDIC is still only guaranteeing the first 250,000, but it appears anything above 250,000 is being guaranteed by the Fed. We don't know if this will happen again. In theory, this means that all banks will now be required to do some stress testing to see what their unrealized losses are. because that was pretty much what kept Silicon Valley Bank off the radar, and we'll see to what extent more banks will fall.
So we're going to the stress test again. Great.
Well, an opinion brought that up last night, how they actually lobbied to have the stress test move from 50 billion in assets to 250 billion in assets, which they were, as we know now, 200, so they were exempt.
Well, at the time, they were approaching 50 billion in assets, so they tried to increase it, lobby for its increase to avoid the joining too big to fail territory, because the cost of compliance goes up. Crow for you is assuming that the bailout will be compensated by holding outstanding bonds to maturity. I don't know about that. Keep in mind that these MBS products that were bought by Silicon Valley Bank were only yielding 1.5% a year over 10 years. Keep in mind, with that same money, you could buy treasuries with zero risk and get 4% return on your money over that same 10-year period. So that means in order to justify the risk in that current 1.5% portfolio, you'd need to lower the price so the effective yield goes slightly beyond 4% to represent the risk-adjusted return. And that's what got Silicon Valley Bank in trouble in the first place.
And it looks like it.
So I want to emphasize this isn't a bailout in the traditional sense. It's a bailout in that the deposits are being protected, but the assets of the bank, the creditors to the bank, and any speculators in the bank are being forced to eat the losses. And I don't know to what extent this is true, but it appears the FDIC, in the event that they cannot cover the $250,000 deposits for all affected depositors, they will They will apply what they're calling a special assessment on the remaining banks in the consortium. So if I had a Bank of Hardy, the Bank of Opinion, the Bank of Ayotte, the Bank of potentially be required by the FDIC to put up capital to pay for the failed bank of stay fly, and make sure the depositors are made whole. That's basically what's going on.
Artie, you're riffing today. I love it.
So the SPY, or the VIX, is up $5.38 pre-market. How much of this could be a tease? And also, I thought Biden was supposed to speak pre-market. Is that coming up in 10 minutes?
It's at 9. Yeah, someone misquoted it saying it was 8 at first, but it's going to be 9.
Okay, thank you.
So, Hardy, what do you think the chances are that the Federal Reserve will not raise interest rates coming up on this, and maybe even potentially cut rates to stop any further cracks in the system, any further bank failures? Do you think that's a possibility?
Unlikely. Depends on CPI print tomorrow.
And I know it's a far off statement, but just something that popped into my head. You know, they've definitely changed course before, right?
They have, but I don't know to what extent it'll happen this time. And that's why, personally, I know I'm flying blind. I know I don't have all the information, so I'm going to wait to see how the market prices various options based on what these institutions know. And then I'm going to clue in my own trades off of that. Oh, and this goes without saying, for those of you who follow my Wrinkle Brain plays, those were all posted on Friday, before all this news happened. So this I can't emphasize more the need to double check the due diligence and make sure that the thesis, the cross, still holds true.
But if you bought puts, you're probably safe.
Yeah, I'm definitely cashing in any of the puts that have doubled over the weekend.
Speaking of your wrinkle brain plays, where are they going to be posted, or do we assume they're still going to be posted on Reddit?
I post them to Reddit for now.
Okay, thank you.
Mainly because trying to post them into Discord turns out in a whole bunch of formatting problems.
Yeah, and plus people would end up like talking over it, so you'd have to like scroll up just to find it. So understandable. Yeah. So speculatively, do you think that the big banks, BAC, JPM, we'll throw on WFC just for fun. Do you think that they have opportunity to pass a stress test this time, or do you think that there's one of them
They will find some way to pass a stress test for the least amount of cost. Part of the difference between the likes of Bank of America, JP Morgan, Wells Fargo, and Silicon Valley Bank is the distribution of that risk.
Interesting. And is that through, do you think that's through their wealth management or more through just the consumer side?
Neither is the institutional banking side.
Okay, understandable. Thank you.
Yeah, one thing to add here, guys, is that JP Morgan, Wells Fargo, B of A, all of those individuals, all of those banks, they use interest rate swaps. The issue with Silicon Valley Bank is they had completely zero interest rate swaps on their books. They didn't hedge any of the interest rates. So those interest rate swaps, their gains, they offset all those losses that are realized from the bonds. The regional banks have none of those facilities in place. That's the issue.
So
I think
the year-end
that no one's talking about.
The year-end balance sheet of Silicon Valley Bank did point to rates derivative securities, but the amount of rates derivative securities had a notional of about 10% of the entire portfolio. So while they were protected against interest rate hikes, it was only against a small part of their portfolio. So to say it's zero is a little misleading. It was ineffective for sure.
Did the CFO see it come and they were selling their shares of stocks last week or the week before or something like that?
Of SIVB, yeah, the CEO or like leadership sold a couple $1 million worth of shares. But they probably still didn't expect this to fully happen. Or they did, and like they did that whole Zoom call and everything to reinsure people as a song and dance.
And I saw that too, and it's probably sad but true, but I don't know if it's really going to move the markets. It's just another anecdote in this sad tale, right? Seems like more corporate greed. You know, you also read that bonuses were paid out hours before the FDIC took over. So, but again, how is that going to affect our accounts? Probably not.
I mean, according to Janet Yellen, it won't affect it at all.
Well, maybe we can find other banks where they're selling their assets right now and get a short in early.
Yeah, and we mentioned that last week. Like, what's the other domino to fall? And that was before this.
First Republic is supposedly the next domino, down 60%. You could say the same for Ally, maybe SoFi. There are plenty of other smaller banks, so it might be to your advantage to just short XLF or buy puts against XLF and then offset that with calls against the majors, because XLF represents the broader banking industry. And then if you buy calls against a basket of JP Morgan, Bank of America, Wells Fargo, Capital One, Citibank, yeah, it should be enough. Then you effectively reduce your exposure to those larger banks and increase your exposure put against all the regional banks that make up the XLF ETF.
Could you do a pairs trade with short the KRE and long the XLF, since most of this potential, the people that have the smaller books and have the more risk, they're the ones that are going to fall harder. So would you do something like that, Hardy?
Depends on what makes up the KRE. I don't know specifically.
Well, all those banks that you've mentioned, they were all in there. So it's the regional banks, it's the ones that aren't the money center banks, if you will. So I think that has the highest concentration on the potential next ones to fail, right? There's a whole set of dominoes in that KRE.
Entirely possible.
First Republic's not in KRE.
Yeah, that's what I'm looking for. I don't see First Republic, so...
Silicon was, though, and a lot of the other Pacific regionals that have been taking a hit.
I agree. I don't see Ally in here either, so I'm not 100% sure. But my guess is the definition of regional banking here for this KRE ETF is not the same as the definition I'm using.
So I have a thesis, and thank you for inviting me up. We're all talking about how Silicon Bank is, just going the way of every other major financial institution. The way of every other financial institution that's had something like this happen to them has just been up. Plus, there's a ton of short interest now, so I just see a short squeezing coming. That's what I think.
Or there could be a lot of short interest and everything just goes to zero.
I think Silicon Bank's getting delisted, so there's no squeeze there.
We don't know it's getting delisted. It probably will.
No,
but...
they named the replacement for it on Friday.
Oh, have they already?
Yeah.
Okay.
It's a done deal.
Man,
But
I just wanted to meme a little bit, guys. Why you gotta ruin my fun? Dang it.
I mean, I am interested in contrarian plays on the banks because I could see a V-shaped recovery on some of these banks if the banking market stabilizes.
Oh yeah,
right.
I was just specifically looking at Silicon, but I didn't realize they had already named a replacement. Oh well.
No, you're good. No, we like your thesis. I just don't want you going down a hole that's wasting your time, right?
Yes. I will waste my time in more productive ways. You're right.
So, getting off banking for a second, Rad the Reptile, did that road open up that you were all about, that mining road?
Not yet. Why?
I just wondered.
Oh, I would mention it if it happened.
All right, y'all, I gotta go. Have a good one.
So, does anybody else think Coinbase is in some bad shape, considering they just moved their funds to Signature?
Explain what you mean by move their funds to Signature.
So the funds that they had with Silvergate, they moved some of it, at least, I know it was in hundreds of millions, to Signature, and now Signature has essentially also been seized.
What's their entire balance list? Do you know? How big is it? Or their balance sheet?
I don't offhand immediately.
Hey, will these banks start dumping some of these bonds and going into treasuries or doing something like that in mass?
They won't be
To help
dumping the
hedge?
bonds. It's a price thing. So everything is done relative to each other. Suppose I have a bond that's earning 1% interest. I have a treasury that's earning 4% interest. So that bond, in addition to the 1% interest you get, will probably sell for, let's call it 95 cents on the dollar. So you're paying effectively 95 cents to receive back at the end of the term $1 plus the interest against that $1 versus a treasury where you put up that $1 and you get 4% interest back. Does that make sense?
Yeah, but so the treasury, it's $1, you get your dollar back, and then you get 4%.
Correct. Whereas on the bonds, you'd pay 95 cents, get back $1 in principal, and then the 1% interest on top of that dollar principal. Basically, the higher the interest rate or the risk-free rate, the lower the non-interest price or the non-interest value for the bond, or the lower the current price for a bond.
Is that based off somebody who wants to buy it at that price and you selling it at that price, or is that go down because of the
Yeah, that's
higher rate?
all it is. Just
Okay.
someone's not willing to pay full par value for a bond that earns less interest than the risk-free rate.
So it's a
So
market price that gets okay.
So it's not a bank dumping necessarily. It's basically the value of the asset being repriced, or the present value being repriced.
No, I meant like other banks that have these bonds now. Are they going to be worried about them being worth less? And
Oh, they're definitely going to be worth less.
I know they have hedges against
But
them.
they haven't marked necessarily, or they haven't realized that value, so they're resorting to accounting tricks to not expose the unrealized loss.
And hedge against it, right? They're buying hedges against those losses.
Well, in theory, they're supposed to. In practice, not always, and probably not enough. And it makes sense, because if you're only earning 1% on your money and you have to pay your depositor some interest rate, there's no point committing even more basis points to buy a hedge.
So these hedges or swaps or whatever they're buying to hedge against the lower return on these bonds, will the sales of those hedges go up right now because other banks might be worried more that weren't hedged enough?
If you're asking if they can charge a higher premium, yes.
No, I'm just asking if like other banks are sitting here seeing this and they're saying, "Oh, we need to start hedging, or we need to start buying these swaps." Is there an opportunity there for us to get ahead of that and
It's probably too
buy
late.
these swaps before they do, or they've already moved? Okay.
I was going to answer the Coinbase question. They have $240 million in Signature Bank, but they are getting bailed out. So they have full access to their deposit.
But they also now need to find another bank to be able to move the funds to.
Right. They're using the FDIC right now as their bank, I guess. They could probably suffer some operating costs because of the transition, which is probably why it's one of the reasons why it's getting hit this morning. I'm looking at VIX calls this morning. We'll see if it keeps up the momentum. I am here for this shit show, and I am super excited.
I have a potential play for banks. So a lot of there's a whole list of smaller banks that could be fucked. Some of them may be fucked. Some of them may be just fine. So what I'm going to look for, obviously options market hasn't opened yet, but what I'm going to look for is some of those banks that have declined 50, 60% in stock price or more over the past several days, and try to see if there are any that look to be okay. I know First Republic is getting financing. So maybe First Republic, because initially they were one of the ones that they looked like they were going to be one of the first to go, but now they're getting financing. So what I might do is take First Republic, for example. I might buy some shares and then buy maybe 1.5, 2 puts per 100 shares. So that'd be protection. Probably go close to at the money. If not at the money, go at least monthly. So at least at least April, maybe further out, depending on how expensive they are. Because if these banks are good to go, and let's say for speaking purposes, bank runs over, economy isn't collapsing, some of these banks are gonna rocket over the next maybe couple months. maybe they rock. Maybe they go up 30%. Maybe they go up 50%, right? But that's what my play would be. I think the calls might be a little bit expensive. So I think I'd kind of rather go with the shares with downside hedge. And then if they do crash, well, you're leveraged on the downside, so you could make some money there. Either way, we'll see.
So you're bullish on regional banks?
No, it goes both ways. You see, so I'm just not neutral. So I don't care which way they go. I don't think we're facing financial collapse. And I think some of the smaller banks, some of the regional banks are actually okay, even though it looks like they're all fucked. I don't think that's the case. So maybe First Republic is one of those banks that's going to be okay since they just got financing. We'll see. But hey, if I'm wrong, or not, I wouldn't even say if I'm wrong. I'm saying if they're not okay, then I'll make money to the downside because I'm leveraged on the puts. Because that would mean that they're going down. Like they're not just going to lose a couple percent. They're going to drop big time, and then maybe they get closed down or something like that. So that's the play for me. Maybe there are other regional banks that are in the same position. I'm still looking.
What's your take on First Republic news? Luce, you think the financing is sufficient, or you think it's only a band-aid?
I'm still looking at it. JP kind of rushed in to give him financing. So in Jamie Dimon, I trust, I suppose. But yeah, I haven't dug into them. I've just seen the headlines that they got financing basically faster than anybody else did. So yeah, but this is kind of a play like I said, if they're not good to go and they go down, well, make money to the downside. So we'll see. Maybe I'll just leave it at that instead of digging into all these banks.
I've got two other banking tickers that are down pretty massively. WAL, again, that's WAL, and PACW, again, that's PACW. They were both down over 30% earlier. Currently driving, so I can't check where they're at right now. But they both seem to be West Coast banks as well.
Yeah, Pac West. Let's see. Well, WAL, I got them up. They're down. What did they close at? Like 50 yesterday, somewhere around 50. They're trading at 15.50 now. So that's a solid 75%. Pac
West 45% down. Almost 45.
So would you play these the same way, Luce? Bet on perhaps a V-shaped recovery or a potential V-shaped recovery?
I do. Well, again, it's either V-shape or death. So, like, I know everyone's just highlighting the recovery part. I don't care. Well, I mean, I do care because I care about the American people and their money, of course. But, you know, it can move either way. However, I don't want to make this play on, like, every bank that's down because that's a lot of fucking plays. So what I'm thinking is I'm probably just going to look for headlines, and I'm just going to see, did they get financing? Is it a decent amount? Who's the financier? If it's like Wells Fargo or Goldman Sachs, I'll probably stay away. If it's JP Morgan, one of the more reputable, or we'll say, nicer big banks, the ones with better balance sheets, then I'm going to sort of trust those headlines. I'm gonna sort of trust those banks. So that's what I'm gonna look for. Who's getting financing, who's providing the financing. And if it's JP, I might make a play on that bank. But it's gonna be a very similar play. But ultimately it does depend on the pricing of the options. If the put options are just astronomically high, then I might not make the play at all. So we'll see.
So JP Morgan is bailing out FRC? That's the deal?
No, they're not bailing them out. They're just giving them financing.
Yeah, just supporting them with extra liquidity.
Yeah, gotcha. And that's, by the way, that's exactly what the Fed is doing. So nobody's getting bailed out. They're lending them money. So they got to pay back that money.
Yeah, a lot of people are using the B word, which is not correct. I wonder why they would go with First Republic and not SBNY.
Depositors are getting bailed out.
Fed
Yeah,
is covering depositors. Yeah.
Shareholders and creditors are fucked.
Does this mean the depositors won't make a run and just leave their money there, so they don't really have to get paid back now that they're like insured?
Arguably, the run has been happening the last 2 days.
But now it can stop, right? Because they can rest easy knowing that their money is guaranteed.
Yes,
It depends, because keep in mind, even if the government's saying we will ensure that you'll get your money back, there is a time period if it goes that far that the government has to pay you back. It's not like if you have bills to pay tomorrow, you can just turn to the government and say, hey, my account failed, give me my money. So
Sure,
it depends
and
on
many might
people
not
do
trust
this.
it, right? And just take their money out anyway, right?
Well, people might justifiably say, I'll leave most of my money in there, but if I have money for bills, I might start pulling some of that, right? For the next couple months because I don't trust it. I can't wait on the Fed to get back to me.
Yeah, I know. Waiting on the check from the government. It could take a very long time. So you got $250 million tied up. Coinbase, as an example, $240 million tied up. That's going to affect some operating costs if they can't access it immediately.
Yeah, it's also worth noting the nature of the depositors of Silicon Valley Bank are a little bit special. Chen from Y Combinator said that this was an extinction level event for venture capital. As is, if you look at the people that were banked there, 88% of the Forbes 100 startups were banked there, and almost 50% of all venture capital firms were banked out of there. So had this bailout not happened, innovation would have, I'm not going to say ground to a halt, but it would have been damn near close, because all that money for early stage investments would have evaporated almost overnight. And then how are you going to innovate if you don't have any money?
I mean, were they really innovating though? Which of these shitty companies were actually innovating?
I mean, not everyone can get a $200,000 loan for their parents and start Amazon in their garage, right? I'm just saying.
And why not? And why not? Yellen needs to do something about that. You know, what's funny is, you know who does have money? Like all the good companies in the stock market. So, you know, yeah, let the dying dogs die. You know, they suck at making money. I don't care. Where's the free market guys here? Where are all the capitalists here? Everyone wants a bailout.
I'm buying puts.
They're asking Yellen to intervene to protect their capital.
Yeah, real libertarian until they need a bailout.
As long as it's going their way.
Yeah, what did you say, Hardy? Privatized gains, socialized losses?
Correct. Privatize profits. Socialize. We need an S for losses. Which ChatGPT says.
T Prince, did you say down 15 or 50? Pac West down about 45%.
45%, yeah. I said
Okay,
it was
cool.
almost 45.
No word.
Socialized suffering.
What the hell happened? I went to bed last night and the futures were up like almost 2%, and now I woke up and shit's in the fan.
You were real happy last night, weren't you?
Yeah.
I saw it and I was like, all right, okay, that's fine. Like, I'll make money on that. And then this morning I was like, oh, okay, maybe not.
ChatGPT says you can privatize profits and socialize setbacks. There you go.
I like that. That sounds good.
So you guys probably already answered this question, but if Signature is getting seized, why is their stock still trading?
Because they do have a bid, don't they?
Because there's a chance they might squeeze.
No, I don't think they're trading. Pretty sure they're halted. They haven't traded since 3 in the morning. Pretty sure that means they're halted. Yeah.
Which one is that?
SBNY. Wait,
Yeah,
you talking about SBNY or who?
Yeah, they're halted. They've been halted.
Oh, that confirms I'm just an idiot.
Well, the fact you're here confirmed that.
You're in good company.
So, I mean, what do we think about Yellen's, like, an original stance of no bailouts and then immediately backtracking to, like, bailing? I mean, at least they're not bailing out the shareholders, right? Like, that's something.
No, she said they're not going to bail out Silicon Valley, and they're not. That's correct. They're not going to bail them out. So that she said that before all these other banks started having troubles. Everybody started doing bank runs.
I suspect a lobbyist got into Yellen's ear that if there is loss of faith in the U.S. banking system, it will get worse. Whether or not that's true is to be seen, but I suspect that's what caused Yellen to adapt her statement.
Yep, I think that I think there's blood in the water, and she needs to. Same thing. The whole reason why they're rolling the president out of his freaking grave to start talking is because they need to quell this fear, prevent any more systemic bank runs.
Trying to prevent a recession again.
Yellen is thinking of her speaking fees after she's done being the treasurer.
Ooh, hot take.
Nice.
Yo, don't be mad because Yellen makes money just for talking, while you're up here losing money just for talking.
I'm making plenty of money right now.
No.
I'm talking.
We're not losing money from talking. We're losing money from listening.
Yeah.
Yeah, so I just figured out a strategy, actually.
flip-flop?
Wells Fargo analyst Stephen Sharecover, which we don't care about his name, downgrades Signature Bank. What a great thing to do. He did that at 3/13/2023 at 10:07 p.m. What a way to like just keep your your ratings just really good. Yeah, I called that one.
Wait.
No one gives a fuck.
3:13 at 10:07 p.m. Is that Japan time?
Japan time, yeah.
Okay.
He just wants to be able to say he nailed it.
Yep.
Meanwhile, Kramer.
Maybe now we know who. Now we know who bought all those puts and shorted the hell out of them.
So something also to consider for anyone who has long positions on anything. I know, long positions here, ha ha ha. But on a serious note though, if you are long on something, even if it's not a banking sector, you might want to consider also just going long banks, since you're essentially betting that the banking sector isn't failing if you're long something, right?
Dude, I'm pretty sure most people are long something. I don't think 100% of the 1,200 people here all liquidated their stocks because of this.
I'm sure there are plenty of people here who just buy weekly calls and then disappear.
Nah, everybody's
Can I
got
ask you
some
guys-
stock. Everybody's got some, like, couple shares of residual GME.
Speaking of GameStop, talking about crypto exchanges with lots of money.
What was that
and
guy's question?
that.
Somebody was about to ask a question.
Yeah, I wanted to ask, by doing what they are doing right now, aren't they setting a precedent? And should we expect in the future that they will, save or let's say insure the depositors, no matter what the amount they have in the bank?
Welcome to America. This is nothing new for us.
I think they set this in
So-
2008.
Okay, so they set this they set this precedent now, and what will be the adverse effect?
No, I mean, they sent this president like 10 years ago in 2008. I mean, this is just they're just starting to pull out the old playbook.
Okay, I mean, my impression was that back then they bailed out a couple of banks, but
Yeah, but then they came back.
Now they essentially remove the counterparty risk with banks, right?
So they bailed out the banks, but then they came right back after and regulated the banks to prevent it. So this I don't think is like a precedent. They're probably going to come back and regulate the smaller banks. where the hole was.
I would just say, so officially 250K is insured by the FDIC, but unofficially pretty much 100% of deposits are insured. That's typically how it works.
I mean, I did talk earlier about the special nature of the depositors in this bank. I would not expect this kind of protection to extend to every depositor at every bank. Just being honest here.
So only the major banks, right?
I think the major banks were more highly regulated because they were bigger. This was a smaller regional bank, and they did not hedge against their bonds where they were taking losses. They didn't have a CRO. So this is like a one-off, but I think they're more worried about contagion of bank runs that are irrational, and I think they're worried about that so they can continue to hike rates.
I mean, at what point or what's the threshold below which you start calling a bank regional, right? This is the 16th largest bank.
So just remember from the layman's terms, everyone remembers 2008. When they hear things like bank runs and bank failures, people get really scared. So the government's got to come out there and make people not get really scared. Because 2008 might seem like a long time ago. It's very fresh in people's minds. So anything with banks and failing freaks people the F out.
To answer the question about what makes a bank regional, it has to have a city name or a regional name in its name. Then it's regional.
So what do you call Ally Financial?
Ally City.
They're in Detroit, just so we're clear.
You think we could have a Black Monday here, Rad? As soon as they hit that bell, just boom, red everywhere. It happens.
It happens. Let's ask the Wall Street Bets panel up here. Are we gonna have a Black Monday? And if we do, you heard it here first, folks.
Spy circuit breakers, baby.
It'll be nice if Silvergate goes under $1.
All I know is tomorrow is the ape vote, so MOAS literally tomorrow. And
Wait,
that's the most important thing.
How is Silvergate still alive? Are you guys still buying that stock? My God.
Fuck no. I got puts
I have
on them.
puts. Yeah, I have puts.
I've got $1 put that I bought for like $10.
Out of curiosity,
I got it for
is
$5.
anyone able to trade Silicon Valley Bank and free market?
No.
Let's see.
Yeah, you shouldn't be able to.
No, it's halted on my platform.
Yeah, I think it's been halted since last week.
Yeah, they halted it on Friday.
Right, but there are some people whose puts are printing, but it's unclear if they'll be able to exercise and realize those profits.
Well, they should. I mean, they'll have to wrestle with the broker, perhaps.
I don't think so, because there are no shares to buy or no shares to sell.
Oh, well, it
If they don't have the
effectively has to
shares-
be delisted, so they're going to have to wait.
If they don't have shares to sell to the obligate seller or obligate buyer, because the entity that sold the put, then how do they realize the gains?
Wait, what do you mean? It's
In
the
order
same
for a
as
put-
always, as any exercise.
When you're exercising a put contract, you are exercising your right to sell at the strike price. But in order to sell at the strike price, you need shares. If you can't buy the shares to sell at the strike price and you don't have shares in your portfolio to sell at the strike price, you can't realize those gains.
Who are you
You
talking
can buy
about when you're
shares.
saying portfolio? This
You can
isn't
buy
the
shares
first
on
time this has
Robinhood.
happened. Yeah, I mean, there are shares that they can transact with. It's the same as
So
always.
then you're not actually exercising the put, Luce. You're just selling it to a market maker or some institution that can exercise for a fee.
So what's your point?
Can the unrealized gains for puts on SIVB be realized?
Yeah.
So last night on the Discord talk, I asked the same question because I have 5 SBNY puts that expire Friday for $70, and some guy explained it as I have to contact the broker, and the broker will basically pay me out the strike price times 100 on each one of the puts that I have.
They should. Sometimes you have to wrestle with them, and sometimes it takes time. But that's like the contract there, so they have to provide that money.
Yeah, there's going to be a delay. It's not going to be immediate gratification, but you will get paid.
Alrighty then.
So we buying the dip today or no?
It's not done dipping.
Negative.
My guess. And with CPI numbers printing tomorrow, I suspect more dipping. Well, unless it already dips really hard today.
More puts.
With this banking situation, does the CPI even matter at this point?
I mean,
Yes,
I'm
absolutely.
buying the dip
Before
on
this-
bearish stuff. So like triple leveraged against.
There's definitely going to be a move based on the CPI. I mean, the narrative for the year has been inflation. So CPI definitely matters to answer someone's question. I'm not sure who asked.
Yeah, it was me. I just argue that if this banking situation isn't sorted out, why does CPI even matter?
Well, they are sorting it out. CPI inflation is as based on what's currently happening, right? So forget like what everybody thinks. You're thinking financial Armageddon, whatever you're thinking. Based on what's currently happening, inflation is still by far a greater problem. Like you understand that, right? There's still a lot more money, way more money being lost because of inflation. Inflation's still out of control. Global banks are still hawkish. So what the U.S. is trying to do right now is to contain this so that they can continue raising rates. Like
What if the cut happens
their
as soon
MO.
as today? Not saying that will happen, but what if the cut? What if the Fed rate cut happens today?
What if stocks moon? I don't know. Like what? What kind of question is that?
Just a heads up, VIX just spiked up.
Yeah, there's panic.
Yep, those UVXY shares I bought this morning are doing good. Bought them in pre-market, 8 a.m.
Does anyone here remember, like, over the past 10 years when there was panic relating to some incident, something happened, and then a couple months go by and people forget about it, and the VIX pops to like 28, 30 maybe? Anyone? Like, how many times that's happened over the past decade?
Right.
I mean, look, I'm not saying like everything's good to go, we're perfect, but I wouldn't be surprised if this was contained, and then a couple weeks from now, you guys are buying calls on all the high growth tech stocks again.
There's the bell.
I'm hopeful that, given all the geopolitical stuff, I just think that it's not a good time for something like this to not be resolved. I guess is my thought with everything going on all over, globally. I'm holding my longs. I mean, I'm not trimming anything. It might be a little bloody. I am optimistic about the CPI report tomorrow.
I'm holding a lot of longs, but I'm full on value investing right now. Definitely trading options, selling premiums. But the stocks that I'm holding they have solid cash flow. They're free cash flow positive. All of them have at least 5% free cash flow yield. I'm not worried about them. I'm feeling quite comfortable with those stocks.
Yeah, and if things go bad, money might move towards those value investments, right? It'd be good for you.
Oh, it's going to be okay. So if the market crashes, we're all fucked, right?
Yeah.
But hopefully you're hedged somehow. I know I'm hedged. But if there's some rattling, there's some fear, nobody wants to touch the non-profitable stocks, and markets keep shaking like this, VIX keeps close to like 30 or something, trades between 20 and 30. This is going to be another year for value investors, like guaranteed. And it's already shaking up to be like that. I think Altria, ticker MO, Altria is a tobacco company. They got like an 8% yield, and the past several days they were flat. They're just like plus minus like 0.1%. It's amazing. Markets are going crazy. Investors just sitting on that stock. 8% dividend yield, and they have a ton of free cash flow.
FRC just halted.
Well, won't be making that trade.
I saw on that Altria Do they sell? I used to use a Jewel. I haven't in a while, but didn't they sell? Did they sell their Jewel or something?
Yeah, they sold it at a terrific loss, and now they're buying some other e-cig company, I think. WN Joy, something like that. I don't know. But to me, it's recession's coming if we're not already, if it hasn't technically started. Probably not. Tobacco does well during a recession, and Altria has the cash flow to continue paying that 8% dividend yield.
Completely agree about the Mo play.
Smoker's gonna smoke.
When are we moving this talk to Discord? Is it now, or should we just keep this one running?
OIP. What you say?
Just another few minutes.
All right, let's see if we can get it started then.
Wow, my portfolio isn't as bloody as I thought.
We'll open the other stage in just a second. I was making sure that I was setting everyone to get notifications. So when you guys do transition over, make sure you click long press and get notifications for the stages. For everyone who's curious what's going on, Reddit is ending the Reddit talks, so we're making sure that these can continue, but they'll just live on Discord. So you'll have to click on the Discord link in the top pinned comment and head over there. And we'll wind this down slowly, but let me get the stage started first before we transition everyone over. Thanks, Hardy.
East West Bank Corp just halted also.
PacWest is still trading. Wait, no, I'm sorry, it's halted. Never mind.
FRC dead.
Is somebody on hold right now? Maybe like external waiting music. Are you on hold for a market crash?
Why is Reddit doing these talks?
Why does Reddit end any of the features that they try to add? It's not the first time.
So short Reddit when they go public later this year?
Sure.
All right, looks like we're starting up on Discord, so I'm going to be moving over there.
$1,100 people here. All go to Discord. Go now.
Okay, so basically, since it sounds like the room is basically dead anyway, I thought now is the time to go ahead and bring up the play that might kill me. As of Friday, something iffy happened, and I got some beef with a very specific somebody that cut me off at the end of the show. That person will not be named, but I am going to revenge trade against them to basically assert my dominance over their puts. So I'm going to Hacksaurus the entire Mass Gamer portfolio, as well as everything in the SoFi portfolio, all my fucking boomer plays, all of my positions, all of them closed. My fucking REITs gone, everything gone. And I am taking every last fucking penny I have, and I am throwing it down on shares of Lucid. As soon as this bitch hits $3, I am going to fuck this shit out of Lucid's puts. This is the way I have spoken.
I was fucking lit, dude.
That's right.
Look, we got some laggards here. For those of you who are just listening to these cool jazz loops and not sure what's going on, we've all moved to Discord. So you're in the noob trap. We've got the Discord link in the top comment. So, if you don't want to just sit here twiddling your thumbs with 550 other people who are just confused about what's going on, the Discord link is in the pinned comment. We've got over 500 people on the Discord now. So yeah, if you do want to continue this conversation, this is the wrong place to be in. Just click discord.gg/WSBverse or the link in the top comment, and you should be able to get in just fine. If you're having trouble, feel free to DM me or chat. But yeah, this is the wrong room, unfortunately, for any more pre-market conversation, because Reddit is ending the Reddit talks on March 21st, so we're starting the transition over now. So yeah, and I guess if you guys have, I'm just gonna keep saying over and over that we're all transitioning to Discord, and the top link is where we're all going. So you can all just sit here and listen to me repeat this over and over again, I guess, if you want. But yeah, that is what is happening.
Oh, opinion. I was pandering to the people about what happened Friday, so please excuse me for continuing the room without you. I'm sorry.
Oh, sorry, I didn't realize there was still conversation going on. I was just trying to move more people over to the Discord, which, by the way, if you just joined this conversation, don't know, we're all moving to Discord because the Reddit talks are ending, and so we're starting that transition process early. But yes, Milmat, very much apologies for interrupting your pandering flow.
Oh no, I already pandered. I let the masses know already, so no interruptions necessary. Well, everybody, let's move this on over to Discord. We'll see y'all there. All right, take it easy, Opinion.
Yeah, take it easy, Masked. I'm gonna sit here, stay in this room, and just tell people that to mosey on over to the Discord for a couple more minutes, or until we hit around like 200 people. Somehow there's still almost 400 of you sitting in here and listening to me keep telling you guys to not be here. But I guess that's cool. You guys can be rebels. But if you want to actually listen to Market Talk and, rebel in other ways, then all you would have to do is click on the Discord link in the top comment, and then mosey on over to the Discord, where, if I take a quick look now, I see that we've actually got over 600 people. That is really good. That is more than 600 minus one. So if you would like to be one of the 600, if you want to be unoriginal and join the crowd, all you have to do is mosey on over to the Discord. Just click the link in the top comment, and you'll get pushed right on over to the Discord. You can verify, use the casino, all that jazz. But really, the main thing that we know you're all there for is just getting in the Discord and hopping in the stage and talking with all your friends about stonks and stuff. We don't have background music there just yet, so I understand why you might want to stay in this Reddit talk, because we've got the cool jazz loops here in the background. But really, there's going to be no more conversation about markets in this chat. You're really just here to listen to me over and over tell you to go on over to the Discord, because we've got the link in the top comment, and if you click that, you can go over to Discord, where you'll find a stage that has, everyone Hardy Loose, and other people of various ethnicities and origins and mental capabilities talking about markets. So if you do want to continue talking about markets or hearing someone talk about markets, you would have to go on over to the Discord. And you would do so just by clicking. I keep saying, please move on over to the Discord, but I'm not seeing the number of people go down. And sometimes it's actually going up. So why are people joining or sticking around just to hear me say, please go to the Discord? That's all I'm saying. Go to the Discord. There's still 330 of you still in this channel, when you could be in the Discord listening to things that actually would enrich your life. And I don't even understand, why are people raising their hands? There's 3 people with their raised hands.
Opinion, do you know what the definition of insanity is, bro? It's doing the same thing and expecting different results. Bro, just close the chat.
No, it's people are just trolling me. I get it. You just want me to keep saying different ways of please move on over to the Discord. For people who can't find the link, you might need to sort the comments by best or hot or anything other than you. Because obviously when you sticky a comment, you wouldn't want it to show up on the top for people who are sorting by new, obviously. That being said, there's still 310 you anywhere here, so I don't admit it. Maybe I'll go down as far as get paid. Maybe somebody else is listening to all these voices. We really are moving on over Discord. You can't. No, I'm not a bot, unfortunately. I'm not a loop. Thanks. I'm just trying to get everybody to move on over to the Discord by clicking the link in the top comment. And by the way, you know what I just realized? Everyone who's listening in through YouTube and Twitch is probably super annoyed because I haven't switched over the stream to Discord. So they're all sitting there in the streams being like, what the hell, man? Please. I came to listen to the stream to listen to Market Talk, not you telling us to move to Discord when I'm on YouTube. But yeah, honestly, if you are still in the audience, please, I'm just going to end it here. Oh, you're in Discord hearing both at the same time. Why would you do that to yourself? Close this chat so we can all go home. Go to the Discord, which, by the way, is in the chat. You know what? I'm going to send a new link to a direct channel, and hopefully that makes it a little bit easier for you guys to find. Here it is. I'm going to post it in a couple comments as replies, and then also as a top-level reply, so that you guys can all click that link, get on over to the Discord, and get in be part of the conversation. Also, big apologies to everyone on YouTube and Twitch who's just been listening to me for the past 5-10 minutes talk and tell people to get on over to the Discord. I didn't mean any harm to you guys. I know you're just on YouTube and Twitch trying to listen into these talks, but I really do need to get these people from the Reddit talk over and on over to the Discord, and they can do that by clicking any of the links, the many links I've posted in the comments below. Look, I know it's entertaining to hear me try and convince people to leave, and I posted like 5 times in the comments for those who can't find it, but you really do gotta go, you know? Yeah, you can go home, but you can't stay here. Or you don't have to go home, but you can't stay here. That's a line from California Hotel or something like that. But anyways, I guess for those who just joined, what I'm trying to do is get you all to move on over to the Discord. We've got links in the comments, the pinned comment, many of the new comments. Honestly, at this point, I'll mail you a letter telling you with the Discord link on it to get you to move on over there if you just promise to leave now. You know, we've only got 30 more people who need to head on over to the Discord before I can end this talk and catch my breath, because I've been doing this for like 10 minutes at this point. Why are they getting rid of Reddit talks? Well, it's because Reddit is a bunch of... Anyways, I can't speak anymore on that because, NSFW rules. But yes, they are getting rid of talks on March 21st. I think their text supply, the backend that they were relying on, Twilio Live, is shutting down, and they weren't getting enough traction because we were the only big subreddit really using this feature. And so as a result, we're all moving on over to Discord. The links are in the top comment or in the new feed. We really only need 30 more people. We only needed 30 more people a couple minutes ago, and somehow some new people just kept coming. And like, really, I'm just trying to get you all to why do you keep wanting new links? It's the same link. Okay, we're all just trying to get on over to the Discord. It's the same link. The link isn't going to change. But here, I'll post it again for you. We're all just trying to get on over to the Discord.
Everyone go to Discord. Everyone go to Discord. Welcome to Wall Street Bets. If you're still on here, that means you're not in the Discord. Go ahead and check out that Discord when you get a chance, ladies and gentlemen. We're going to stay on here until we dial down here in just a second. Ladies and gentlemen, the Discord is literally, the link is in the channel. And if you can't see it, you can definitely see it when you see, when you go to Wall Street Bets, you can see it, okay? But yeah, check it out. It's in the comments section. We will see you there. We're going to go ahead and end this talk so we can see you on Wall Street Bets Discord. Once again, it's in the comments section. We're going to end this talk, right? Opinion Ice? Is that right?
Oh, well, I was going to keep going until we hit 250. We'll settle for 270. All right, we just got.
I'm literally in suspension of disbelief that this talk is still going.
Ladies and gentlemen, if you are still here, you need to leave this room. This is not a drill. This is an immediate call for you to go to the Discord channel. Check us out. We got analysts there. We got casinos. We got movie nights. And ladies and gentlemen, if you were on the Discord, you would have saw this China movie, which literally mentioned Silicon Valley. Did any of us play it? I don't know, but that's speculative, right? That doesn't matter. Ladies and gentlemen, you're not allowed to be in here right now. Please leave and go to the Discord. Please, even the robots that are in here, ICU programmed, please leave. We're trying to get to 270.
I will light this room on fire if you do not leave right now. Please leave.
We're going to light this building. This chat is literally on fire right now. If you're not looking at your stock portfolio, that's definitely on fire right now if you have that boomer stocks.
There we go. There we go. We hit 269. 69 was the magical number. We can end this talk now. Thank you, everyone, for coming. And we'll see you on over at the Discord. Cheers.
Discord. Cheers.
Woo.